Hello guys, how you guys doing? Did you miss me? Welcome back to the channel, guys. I want to thank you for coming back on here, and I want to thank you for being with me today. So I just want to say thanks, and I'm gonna share with you from the CNBC meeting. As you guys know, I've been telling you guys to buy. For the last week, I've been pounding the table telling you to buy stock. So hey guys, so we're getting ready to listen to Jim Cramer and Jeff Marks for the CNBC Investing Club. I know the last time we talked, the market was really red, and now we're here where we're doing better. You know, we had an update. I hope there's the many more updates to come. But I'm not going to waste a lot of time. I'm going to let these wonderful technicians kind of analyze the market for you, tell you what you should do, and then I'll come back and close. So let me just hit it with Jim Cramer and Jeff Marks.
We had an epiphany last week, which said that if we're going to be this oversold, we have to commit the most cash we've ever had. And that's what we did. So even though we liked the market and we were dramatically oversold, -9 on the oscillator last week, we have to explain to people, Jeff, that when we were down 400, 500 Dow points, we, of course, have to do some buying. So when we're up 500 or up 3% on the NASDAQ, we have no choice but to do some selling because that's what we do.
Right.
Now we're going to look over and over and over, but we have some ideas.
Yeah, and we were just talking about this right before we went on air. The notion of, okay, we put money to work when it was oversold because the market was oversold. That's our discipline. It says that whenever we hit 10% on the oscillator, right, you have to think a little bit more. You have to think opportunistically.
Right.
So now I think where we're getting at is we want to basically take out what we put to work Friday with the S&P.
So we can build up a little bit more reserve. Absolutely. Now, Alan on Twitter, as you correctly pointed out, he must be a subscriber. He says, if the oscillator could be wrong this time. Okay, here's when the oscillator is wrong. The oscillator is wrong when you have systemic risk. Systemic risk means there's actual risk to the fundamental financials of the world. Think of 2008. The oscillator was very wrong there. It just kept getting oversold. You actually, the only thing that you caught was that the TARP was passed, and you had a nice bounce there. Now, this is not a systemic risk time, and therefore, when I've measured the oscillator over a 30-year period, it says buy when it's this high, but you must be willing to sell as it gets more overbought. We will be dramatically overbought today, so we have to make some sales. Now, let's just speak for a moment about the idea of a technical indicator, because it's important for you. We're not technicians. We're not hedge funds, but we look for certain totems. We know that we don't like to sell into a market where it's been pounded every day. We know we like to buy into that. Sometimes you have to hold your nose and buy, which is what we did. Now, as we're being vindicated, we have to make sales. Now, we're going to have to sell some things that we might have thought were going to bounce correctly. And we have no choice. Remember, if this were -3, you know that we would say, okay, we got to go buy Qualcomm. Oh my God, Qualcomm, how can we buy more? Well, Cristiano Mon came on Mad Money and said, listen, we're going to make the numbers. So why shouldn't Qualcomm be up? I have no desire to sell Qualcomm. At the same time, look at this. We were bold. We were bad. I mean, bad. He came on, told a good story. And then this is China, okay? China lockdown. China lockdown, he says you can overcome China lockdown with the industrials. David Faber this morning was saying to me, Jim, do you really think that China lockdown is important? I said, absolutely, for tech,
sure,
for Qualcomm, for NVIDIA, where they make and sell, for AMD. They're all part of the complex.
Supply chains as well. I mean, remember what Cisco said last quarter?
Right, Cisco would be up a quick 10.
Right.
So I'm just pointing out that the oscillator is probably right. Yes, the SPACs have blown up. Yes, the IPOs. There's 600 stocks that have literally blown up and are not to be touched, or even, I'm working on Box, for instance, for a piece. They're like, what happened to Box? So what I'm saying is that we are a little further along. Now, you might have read my piece. I hope you do. I worked all day yesterday on a piece to you about where we are. And one of the things I wanted to make clear was that a bear market lasts 180 days on average, while we're at 190 days. that 6 months after recession, we are up 7%, 1 year up 16%, and after 2 years up 20%. That's the average, and the probability of is the highest that's what's going to happen. So with that, we have no choice but to do some buy, and that's what we've done.
Right. I love that stat about the recession, because as prices go down, you have to think, well, your longer term returns are going to be higher. Just it's math there. So you to your point, 6 months after recession, we're up 7%. Some people actually think we're in a recession now.
Right. I could argue that we are. I mean, when I listen to Stuart Miller from Lennar, who's talking about the slowdown, it's quite obvious, by the way, that the Fed's winning. And they're not getting any credit that they're winning, maybe because they were supposed to start earlier. But when I look at this, I say to myself, okay, this is a rebound off of something that is engineered by the Fed, and it just can't keep going down every single day on the same news. Now, one of the things that we've been building as a hedge, if you read yesterday's white paper, is oil. And that does not mean we're not going to sell oil as it goes up, because we don't like, as I said in the piece, don't like to turn gains into losses. But oil has been a mainstay hedge for us, because if oil goes up, the rest of the economy goes down. But right now we've got a nice oil lift, so we may have to make some decisions.
Yeah, we're taking a look at things. But again, I would say the portfolio is around 10% oil. I don't know if we really want that to see 12% or so. So if we do get a lift,
I don't want to be 12. I'd rather have it go, if it goes to 12, cut it back to 10.
Right. You pull some off, you take some gains. I think that's kind of how we're thinking about it now. But you still need to have some energy in there to remain diversified, because to your point, if oil falls, inflation should ease. The Fed may not need to increase rates as rapidly, as expeditiously as they need to do. And then you're going to have the rest of your portfolio rally.
Exactly right. Now, let's go into a stock that could work here, and no matter what. And I happen to be in this industry because my wife has a mezcal business, Phosphoro. Probably read some of our tweets. Constellation Brands. This is Mexican. This is Modelo, and this is Corona. And I've got to tell you, I think that this is the only beer stock that people like, and that this is a phenomenal level. I would not sell a share here. I am a buyer of Constellation at this level.
Yeah, UBS downgrades a bunch of beverage names, Tab, Keurig, Dr. Pepper, Sam Adams, but they still say they still like Constellation. They still like, for what it's worth, Coca-Cola, PepsiCo, Celsius. But Morgan Stanley, they did a deep dive on STZ over the weekend. They actually raised the price target. You don't see too many of those.
No,
this 298
is,
from.
If you're looking for something to buy today, it's only up this. I suspect it could be up 6, 7.
Yeah, and now's their time, right? Their Mexican beer portfolio, Modelo, Pacifico, Corona.
Fantastic.
Those are the ones people love to drink now. Hard seltzer kind of getting a little bit out of favor, which I think is actually good for them, because that means more people are probably going to
go back to beer. And having worked with them very closely, they're an amazing company. They're the only grower in the beer industry.
Yeah,
they make it. They actually take share and they grow. It's a terrific opportunity. And one other opportunity that I think is interesting is Qualcomm. Cristiano Mom was on Mad Money. I want to make this point again for Qualcomm, and this is important. Cristiano is an excitable man. Okay, he knows.
He stood right here. Remember, we had him on last
He knows that China is the weakness. He doesn't know when China's going to come to his senses. But this is one, like Apple, like Nike, by the way, like Starbucks. If you just got news that they won, now they can declare victory. I mean, I'm reading the book right now about another remarkable book about Chernobyl. And they had many nuclear accidents before Chernobyl, but the only one they ever focused on was 3 Mile Island. I mean, the numbers of both Russia and China are dubious, okay? China says very few people have died, but they're still on lockdown. I question that. But I need you to understand that we cannot afford to be not invested in these stocks if we get a China resolution, because we're going to be scrambling and buying. This is like up here, okay? Apple's going to be up 30 points. We're prepared for those. We have to, therefore, take some downside. Could this go to 110? Easily, okay? But I want to take the downside there. At the same time, when we have up moves like today, we have to reposition. And it is painful right now to admit that we have to reposition. But just as we bought when it was down 3%, we've got to sell when it's up 3%. No choice. It's what we do.
Anyway, guys,
now, a couple of things.
Thank you, guys. Thank you for looking at this clip. I didn't want to go too long, but so as you can see, we're talking about stocks tonight, and we're telling you some of the stocks to buy. I still say companies like Nvidia. I still love companies like Apple. I think it's a great opportunity to get in. I did talk to you about some shares last week, so I'm not gonna dive deep into it, but I think the STZ Constellation brand is a good stock. It's the maker of beer. So I'm going to just share that screen with you guys, and we're going to talk about it for a little bit. As you know, I am trying to help you build wealth one investment at a time. So Constellation brand, they give a nice dividend. It's only $234. And I've been saying it since last week. I've been telling you guys to go ahead and buy stocks. And if you don't buy stocks, you're going to regret it. If you guys had just listened and bought some stocks last week, you could have even sell if you didn't want to be in long term and make money. You'll be sitting nice and you will be going to the bank with a nice fat check. Anyway, guys, as I said before, do me a favor. Don't treat me like my job. You know, they don't like me. So I want you to like and subscribe. I want you to like Ernie today and subscribe, and don't treat me like my job do. Anyway, guys, thanks for watching the video. Please don't forget to comment and subscribe, and go buy some stocks tomorrow. I did a lot of videos about stocks. Constellation brand, you could buy Apple, Nvidia. There's a bunch of stock that I share that you could go ahead, and if it's just one purchase, Amazon, just make a purchase and purchase something. I think tomorrow we're going to even see, I think this bounce is for more than one day. Anyway, guys, thanks for watching the video. See you tomorrow when we talk more stocks. Anyway, guys, later. See you.